If you clicked on this video because of the title, let me assure you that it's no joke. If you invest in any one of these two split funds right now, you will snag a 20% dividend yield. That's right, 20% interest a year. How is that possible? Well, I'm going to explain how and do a deep dive into these two funds right now. What's up investors, Adrian here and welcome to another video on passive income investing. So a couple of months ago I released two videos on split share funds. The first one was really about how these funds work, and the second one goes through my top 5 picks or my top 5 split corps. So I won't do a deep dive on how these funds work in this video. So if you have no idea what a split share fund is or how they work, I suggest you go back and check out those two videos. I will give you a quick summary now, but I want to focus more on the two funds in question, DFN and LBS, and really how you could get a 20% dividend yield. So split share funds is essentially it's a fund like an ETF, and they invest in a basket of dividend paying stock. So it's called a split because there are two classes of shares which have two completely different stock symbols, so they're listed separately. So you have the preferred shares, which in my opinion are not very enticing, and then you have the capital shares, also known as Class A shares, and that's where all the money is. So the preferred shares, work like preferred shares in general. They're considered fixed income securities like government or corporate bonds, and they tend to have a dividend yield of about 5%, nothing more. The Class A shares, on the other hand, capture all the ups and downs of the stocks within the fund, and more so than other funds because it uses leverage. So leverage is cheap borrowed money the fund manager uses to buy more shares of the stocks within the fund, thus increasing the dividend yield. So in addition, they use the covered call strategy to boost the dividend yield even more. So combine the dividends the stocks provide, as well as the leverage and the covered calls, and you have a huge dividend yield. So here's LBS, guys. It's called the Life and Bank Split Corp. And like I mentioned before, you see here that there's two classes of shares. You have LBS, which are the Class A shares, and you have LBS.PR.A, which is a completely different stock symbols for the preferred share. So if we scroll down and look at what this fund holds, it says it right here. I'll make it a bit bigger. It's an approximately equal weighted portfolio of Canada's four largest publicly listed life insurance companies, or life cos, and the big 6 banks. So if we click on the portfolio, you will see exactly it. So you have CIBC, National Bank, Sun Life, Bank of Montreal, Royal Bank, etc., etc. So it's basically the 6 big banks and the 4 big life insurance companies. So the top financial companies in Canada. So as you could see here, if we look a bit closely, you could see that the distribution is 10 cents. That's 10 cents a month, or $1.20 annually. And the unit NAV as of November 12th, so it's a little bit outdated, is $15.95. So like I said, this is thanks to the recent rally it had, and I'm sure it's even more, a lot higher than $15.95, simply because on Friday, November 13th, it was a great day, and today is a great day also. So way past the $15 unit NAV threshold. And if you look here, there's a little one next to distribution. If you scroll all the way at the bottom, you could actually see what I'm talking about here. Sorry, I'm just go to overview right here. So no cash distributions will be paid on the Class A shares if, after payment of the distribution by the company, the NAV per unit consisting of 1 Class A and 1 preferred share, so the unit NAV, would be less than $15. So there you have it, guys. As long as this guy here is over $15, you will get the dividend. So you might be asking, well, how long has this fund been out there? How many dividend misses, if any, have they missed? Well, if we look at the graph here, you could see that this fund was created back in 2005. And did it miss any dividends? Yes, it did. I calculated already for you. They missed 18 out of 168 months. So the bulk of the 18 was in the 2008 recession. You could see here there's a nice gap, and 8 misses of the 18 are actually in 2020 because of the COVID crash. You could see here the stock went down, and there's no little d. That's because there's no dividend. So I'm really confident that they will re-enable their dividend this month. They have to. It's policy once it's over $15. So the fact that they missed 18 months out of 168, it's still pretty good considering both times were really in bad market steep decline. So well worth it if you ask me. So let's check out DFN and see how it compares to this one. So this is DFN, or Dividend 15 Split Corp, and just like LBS, it's a split corp that has 2 classes of shares. So you see them here. The class A, which we're interested in, is DFN, and the preferred shares are listed under dfn.pr.a. So what kind of companies are included in this fund? Well, it's very similar to LBS. You could see the core holdings here. So they have a lot of the top Canadian financials, like the banks and the life insurance companies. But the main difference that compares to LBS with this fund is that it's a bit more diversified in terms of sector. So as you can see, it not only has top financials, but it also has some utilities, it has some telecom, and it has some energy, like we see here. You can see Bell is here, TELUS, those are the top telecommunications companies in Canada. You also have Enbridge and TC Energy, TransAlta. So you have some energy and utilities as well. If you want the full breakdown, you gotta go here and click on fund documents, and then you click on this file, which is the quarterly portfolio disclosure. So you open that up and you get the full portfolio. This is as of August 31st, 2020, but you could see the breakdown here. So here are all the companies. Again, very well-known Canadian dividend aristocrats here. We're not talking about penny stocks, far from it. Like I said, the main difference is that it's more diversified. So you see the bulk is obviously financials, but you also have a nice share of energy. And when we say energy, it's not the oil and gas producers. It's the pipeline companies like Enbridge and TC Energy that make up most of the energy sector. Then you have telecom services, Bell and TELUS, some industrial, which is Thomson Reuters, utilities, and consumer non-cyclical, which means consumer staples, and that's this guy here, Loblaws. We all know what Loblaws is. So yes, it's called Dividend 15, and 15 companies will make up the bulk of this fund, but you also have a couple of little additions here like Loblaws, Emera, TMX, AGF, which is a good idea in my opinion because it diversifies this fund. So if we go back to the website, like I said, it's not as clear as the Brompton website, but if you scroll down, you can actually see what the unit NAV is. Right now, they have it at $14.34. So you might be asking, well, it's not over 15. You're right, but this is from October 30th. So it's very outdated, and the market has rallied substantially in the last couple of weeks. So I'm very confident that the unit NAV is over $15 now. We'll just have to wait until it gets updated. Quadravest, the manager of this fund, usually updates it every 2 weeks. So it's November 13th, November 16th now, so it should be updated any second now. So here's the graph of Dividend 15, guys. This fund has been around since April 2004. How many dividends have been missed since then? Well, the answer is only 4 out of 198 months. That's right. Only 4 misses out of 198. That's pretty much 2% only, which is simply phenomenal. If you look here in 2008, 2009, where there was obviously the big recession and the big stock price tank, they actually did not miss any dividends during that time. And I personally am pretty sure that it's because of the good diversification. So it has a lot of financials, but I think the other sectors kind of helped it stay above $15 unit NAV. So they did not miss any dividends during that time. The 4 dividends that they missed were all in 2020. Thank you, COVID-19. So as you can see here, in 2020. They declared the January one, the February one, but the next one was June. So they missed March, April, May. Then they re-enabled it as of June. They gave the June one, the July, the August, and the September one, but they missed the October one. That's because of the market dip in October, which made the unit NAV go under $15 once again. But I'm very, very confident that the unit NAV is now over $15 thanks to the huge rally the financials did and everything else in Canada as well. And since the bulk of it, like LBS, is financial stocks, I'm pretty sure it's over $15. So how do you calculate the dividend yield, by the way? Why is it 20%? Well, it's really easy. You take the annual dividend rate, which is $1.20, and you divide it by the share price, 5.99. Once that's done, you just do times 100 and you get the dividend yield. So a little over 20%, simply phenomenal. So there you have it, guys. I am extremely confident that both LBS and DFN will re-enable their monthly dividends this month thanks to the huge boost the financial sector got recently due to the 2 vaccine announcements from Pfizer last week and the one from Moderna today. So these announcements are making the stock market finally look past COVID-19 driving up the financial sector. Now, can there be another market dip in the short term? Of course there can. Nobody can predict the stock market. Trump is still contesting the election results. COVID-19 cases are still on the rise, etc., etc. But keep in mind that COVID-19 will eventually disappear one way or the other once the vaccine starts rolling out next year. So if you're still scared to invest in higher risk funds like these two, one thing I suggest, and this is something I do all the time, is to actually look at the stocks inside the fund. That remains the most important thing with any fund, and as we saw, they are made up of the best dividend stocks in Canada, mostly the top financial companies which have been around for a really long time and are really the backbone of the Canadian economy. So I think now is a perfect time to pick up these two stocks in order to book a huge 20% dividend yield. Don't forget that these funds have a set dividend of $1.20 a year or 10 cents a month. So as long as the unit NAV is over $15, you will get the dividend. Missing some dividend payments once in a while is well worth it if you ask me. Like we saw earlier, dividend misses are pretty rare and only happen during steep market declines, which are always temporary. So look at it this way: with an interest rate of 20% a year, all you need to do is get 5 years worth of dividends, which is 60 monthly dividend payments, to make all your money back. Anything you make after that is pure profit. So please hit that like button if you will learn something from this video, and if you're a Canadian dividend investor, make sure you subscribe to my channel. I got a lot more videos coming up on investing. My content is geared towards everyday Canadian investors who want to buy and hold stocks to collect the passive income they provide. Like myself, this will enable you to generate a nice stream of passive income to enhance your quality of life and eventually reach that ultimate goal of financial freedom. So with that, thanks again for watching, guys. Take care, stay safe, and see you next time.